Yo, what's going on, guys? Bexio back, and today we are going to be going over my own stock portfolio, all of the stocks that I own, why I own them, and plans for where this is going to go, and how I got into stocks to even begin with. So obviously there's a lot of big finance YouTubers on here, and that's literally where everything started, was from getting into how to make money work for you and make sure that you are putting yourself in a better position to be in 5 or 10 years than where you are right now. And obviously the stock market was the easiest way to start getting into that. So during the whole illness thing going on that crashed the market, and a lot of people were scared, people were selling, people were getting out, stocks were plummeting, and circuit breakers were being set off left and right. And those times, obviously, now looking back on them, were actually the best time to start investing because the market skyrocketed up. We can see it in my own chart, which I'll show. So let's jump into my stocks and see what the portfolio looks like. So we can see right here, I have $19,084.33 in the stock market. And we'll look at the all-time chart. This point is where the drop happened. That's where a bunch of money, I started plowing money in, watching it burn for a long time. I literally sat there and plowed money in because I just knew that valuations were way too low. There was nothing fundamentally wrong with the companies. And I went in blue chip stocks only. I didn't try and get the next 3,000% stock. I wasn't trying to do that. I was just getting blue chip stocks. I was buying Apple, Microsoft, those. And I'll go through my portfolio here. But that's where it all started. And then you see the run up, and where we are today is a little bit lower than all-time highs. But there's a little bit of explanation for that. I haven't really been investing in the stock market recently. I've been putting all of my investments that I do every month, I've been putting into crypto and not stocks because it's just way too much potential to ignore there. So we can look at the first stock I own is Apple. Obviously, they are at almost $133 a share, which they're coming up. Big tech's coming back in. But you can see my position. I have a little over 35 shares for almost $4,700. My average cost was $59.45. That was post-split, so my average cost was a little bit higher than that, like in actual money I paid, but after the split, that's what it comes down to. And Apple makes up almost a quarter of my portfolio at 24.5%. The returns, you can see total returns 123.5%. It's almost $2,600. And Apple is just a company you can't go wrong with. They're so stable. They print money. It's a great company to be in. They pay a little dividend, so you get a little bit for holding the stock, as well as their growth is insane. I mean, just look at the last year, 98%, even with this dip, the big dip that's happening right now with tech. So, and then past 5 years, 381%. So that's insane gains. That Apple basically almost doubles your money every year, or every 2 years, which is insane. So Apple is just a great company all around. This actually was the second big company, or it was the first company that I started really plowing money in, because the first investment that I secured my footing in the stock market was VTI here. So this is the Vanguard Total Stock Market ETF. Obviously, they're a little over 214. I have almost 25 shares, a little under 25 shares, for $5,300. The average cost was $164 for those, and it makes up almost a third of my portfolio at 27.8%. And then the return on this is a little bit lower, but again, with VTI, this is what happened with VTI. So the February, the month right before the huge sell-off and crash of the stock market, is when I put $3,500 into VTI. I wanted to get a footing and just a nice steady ETF that I didn't have to worry about really fluctuating in value or causing a big downturn in my portfolio. Well, I reached out to blue chip stocks that are slightly more volatile, but not something that's going to like make you a ton of money in a week or lose you a ton of money in a week. So obviously 3,500, and then the crash happened, and I don't know where it went down to exactly in like the price range, but I think it went under $3,000 that I had in it. And I didn't put any money into VTI. I was focused on blue chip stocks because their values were so low, and I was willing to take a little bit more of a risk with blue chip stocks and go for a bigger return because they were so undervalued. I just couldn't miss out on that opportunity. So that's why the total return for, I've had this for just over a year, is only about 30%, but it's still $1,200, and it's just the footing of the portfolio. It's something that I got into first, and it just holds the stability of stocks, because I like to look at the stock market and not have to worry about it being down, my portfolio being down thousands of dollars in one day. I already worry about that enough with crypto, so I want stocks to be a little bit more stable than that. So next up we have Microsoft, and this company is the second company I started investing in after Apple. And we can see I have a little over 10 shares of Microsoft for a little over $2,500 at an average cost of $178. They're now trading at $255. And it makes up 13.5% of my portfolio for a 43% gain. Basically, this is all on the year. It's all time, but I've only had these stocks a little over a year at this point now. So 43% in a year, insane gains, is also an insane time for those gains. But Microsoft is huge with the cloud technology, and their software is where they make a bunch of money, which is huge profit margins. And with everyone learning that they can work from home and companies maybe adopting that model a little bit more, the software in Microsoft runs could be needed more, as well as I think they own Zoom. I'm pretty sure they own Zoom, which was obviously used a ton during this time, and their cloud storage and cloud software is what a lot of businesses use, and more people working at home, more need for the cloud networks, and it just makes sense that they are going to make a lot of money. So with Microsoft, it is a pretty good investment, obviously, for those software bets, and it's big tech. You really can't go wrong with big tech. As well as they pay a small dividend. So basically all these blue chip companies that are growth, like Apple, Microsoft, they pay a small dividend, and then you get a lot more growth with a small payment, and I'm fine with that. I'm not looking to make a bunch of money off dividends right now. I'm looking to make my money turn into a bunch of money, and then possibly move it to like a dividend portfolio or something where it's paying you more to hold the stock than to grow it. And then the next stock up, we've got Disney here at $187 they're trading. Currently, I have 12 shares of them for $2,256 at an average cost of $103, and they make up almost 12% of my portfolio with a gain of 81% for over $1,000. It was insane how people didn't realize Disney had a cash cow with Disney Plus. That's when I started buying them. I started watching Meet Kevin's videos about talking about Disney, and then looking into Disney Plus, and they had so many subscribers. They're challenging Netflix, and it wasn't getting priced into the stock price. So I decided Disney's way undervalued at 103. I bought a lot of Disney under 100, and then I rebought in probably around that 105, 110 mark. And I haven't bought any more lately, but I would buy more. Disney's one of my bigger bets for the near-term future because of reopening their parks, which is just a big cash cow for them. And you get the theme parks, you get Disney Plus. They're just going to be rolling in so much money. They're not going to know what to do with it, and the stock is going to reflect that. And I'm super excited to see where Disney goes. But the only problem with Disney I had, or in like hindsight looking back on it, was their dividend. At the beginning when I started getting to Disney, obviously I saw the dividend and it was like cool or whatever, but it got cut and they stopped paying it. I think they started paying it again now, but it's a lot smaller, which I'm fine with because their growth trajectory and where I think they can go is so much higher than where they are now. And I think we're going to see that come probably within this year. Disney's going to show how strong it is and how strong it can come back. And I have a small portion in McDonald's here. This is when I started getting into more dividend-ish stocks and seeing how much money I could make out of holding stocks. And I bought 3 shares of McDonald's at, basically I only bought it once at $181. That makes up a little over, or almost 4%, a little under 4% of my portfolio for a 27% gain, or $154. And McDonald's is a position I'm thinking about expanding into because they were very adamant on protecting their dividend, and I like to see that from like a company that pays a good dividend. There's 2.21%, and they want to protect that, and they're very adamant about that, as well as the amount of money they've started making again, like drive-thrus, and their locations are pouring in a lot of money. Their chicken sandwich launched, and they got a bunch of people to come in. They had that Travis Scott deal. They're making moves, and they're making money, so I really like what they're going to be able to do long term. It's always going to be around. McDonald's, like, everyone eats McDonald's. Everyone knows what it is. It's like a staple, so it's not going anywhere, and they sell a bunch of food and pay a good dividend. So I'm thinking about that might be where I start adding more money once I get back into stocks. I'm not leaving the crypto world just yet to put money in stocks, but at some point there will be a flip there once prices start to go even higher and things like that, and like the amount of money turns into something. I have my own little ratio here, but McDonald's is something I will definitely be adding to. I like the protecting dividends, and they pay a good dividend. It's like a little over $1 a share, so McDonald's is good. Glad that I got into it when I did, because there was a good run up. It was on a very good sale, and it ran up. And now, if I go back and buy into McDonald's, I'll be able to get a lot of shares or put a lot of money in without buying my average up so drastically, and I'll still cover myself with the profits I have of almost 28%. And I'll be able to cover that with buying in to get more dividend pay without sacrificing like the total account of the McDonald's stock, if that makes sense. And finally, we have the most risky stock of them all is Plug Power. These guys, I did a ton of research into, loved what they were doing, and I thought that with how things are changing and how EV's taking over the world, and EV isn't super easy for the trucking industry, like the shipping industry, the 18-wheelers, those guys, where the batteries are too heavy for those trucks to move or ship things, and it would be a big hassle to try and get weight regulations and all those things on. So I think hydrogen is a good play for the trucking industry, which makes a lot of money and is very important for infrastructure. So that's why I got into Plug, and I'll show right here. I have 110 shares of Plug at a little over $3,500. My average cost is $8.83, and that's very inflated because 100 shares that I have were bought under $3. My average cost for the 100 shares was at $2.97, and that makes up 18.5% for a 262% gain on Plug Power. And it was a massive bet that I was making because it was a penny stock at the time, and I thought the energy switch that's going on and hydrogen being a big player, this is not something I didn't even plan on Plug being at these levels. Disregard $70, so you could double all of this. So I had over $7,000 in Plug, and you see it's at 35 now, and I didn't sell. I'm not looking to sell. This is a 5 to 10 year play. I think hydrogen is going to be super important, and Plug is definitely going to be the company that has the first mover advantage, as well as market domination on making hydrogen and the fuel cell technology. So that's why Plug's super important, and I think it can evolve into the next huge energy company, and it's only $17 billion right now. Imagine 10x puts it $320 a share at a $170 billion company, and if it's running infrastructure things and doing shipping and hydrogen starts to really get integrated, that's still microscopic for what they could be, and I think that they can be a huge player in how everything's going to work in the world in the next probably decades. So that's why I have them and holding them and not selling. I mean, I watched it go from 7,000 to 3,500, and I'm not selling because it's just something that I think can have a huge impact within the next decade, and that's what makes it important. And then to wrap this up on my portfolio there, with all the stocks I have, I'll say the dividends I make off of them is $149 a year, so nothing crazy. The past year, this portfolio has made 75, almost 76% for $8,238 gain, and that is coming down off of its downtrend in the market where all the stocks, or the big tech stocks, sold off. And obviously that's the majority of my holdings is in Apple and Microsoft and VTI. So VTI held together because of its ETF, but Apple and Microsoft fell and Plug got ripped to shreds. But I still like what Plug can do in the next decade, and they are recovering nicely. I still need to make up a lot of ground, but I'm not expecting to get back to all-time highs on my portfolio right away because of I'm not putting money in, so that's a big factor into that type of stuff. But guys, I hope you enjoyed this video revealing my portfolio, and I'm gonna keep everyone up to date on this now that it's out here. I think that it's interesting to see, you know, where the money's going, how things are going in the market, and how people are investing their money, to kind of show everyone what you can do. But guys, as always, don't forget to smash that like button and subscribe. We are on the road to 1,000 subscribers. See you guys in my next video.